On today's tax update, the IRS has announced they will be pausing accepting tax returns claiming one specific tax credit till at least next year. So we'll take a look at which one that is and what it means for the 600,000 returns that are currently pending with this credit. We'll also recap the next round of tax refunds scheduled for release this week, in addition to the backlog of unprocessed tax returns, also the ongoing situation with TPG returning certain tax refunds back to the IRS. And then we'll take a look at a new IRS notice that has been starting to appear in taxpayers' mailboxes, which can be extremely serious. Starting off with those tax refunds, as the next round of direct deposit refunds is scheduled for release on September 20th, with those deposits reaching bank accounts by September 25th. The next round of paper checks will be printed and mailed out on September 22nd, with those part of the latest paper batch scheduled to receive those within 7 to 10 days after that September 22nd date. The IRS did not have any new numbers to provide in their latest update on the backlog of unprocessed tax returns and have started slowing down and providing any updates in the last month on the current situation with pending tax returns and refunds. However, based off the latest numbers, compared to the previous update, is that the backlog of unprocessed tax returns is now down to 1.1 million, with all but 47,000 of those being e-file returns and those requiring special processing. Amended returns are now down to 951,000. Employer returns also down to 384,000, and that's important for those experiencing delays due to wage verification. However, another trouble spot is amended employer returns, which saw an increase to 637,000 remaining. For those who submitted ITIN applications, the IRS has begun to start processing applications now received in the month of July. As we mentioned on amended returns, the IRS has also not provided an update on those, with the latest figures showing 951,000 amended returns still on process. We do believe once the latest update is released, that number will be below 900,000 left. However, based on current trends, it does appear that the backlog of unprocessed amended returns will carry over in the next tax season. Now, amended return processing is still taking 5 to 7 months on average, and while some can be completed before that time frame, there are going to be others that are going to take longer than 7 months. Last year, some viewers reported waiting over 14 months on their amended returns to be processed and refunds finally issued. Multiple comments coming in daily from viewers who reported their tax refunds were issued only to see them returned back to the IRS by tax processor TPG so that they could be sent out as a paper check. Now, TPG is the tax processor several large companies such as TurboTax and TaxSlayer use for refund processing. And as we've reported in the last several months, taxpayers impacted by the problem of having their returns returned to the IRS has increased. Now, the common question remains is how long will it take for someone to receive that refund if it was sent back to the IRS by TPG? And that depends on your particular situation. Now, if TPG did not send your tax refund back to the IRS as flagged, then it will be sent out as a paper check by the IRS in 4 to 6 weeks after they receive it back. But do note that is 4 to 6 weeks after they get it back. And just because TPG says they're sending it back does not mean they will be sending it back right away. Sometimes it could take them a month for it to get back to the IRS. So for those impacted by this, it could take anywhere from 2 to 3 months to receive that paper check. Now, if TPG does return it as flagged, this is where it could take 5 months or longer to receive your tax refund because the refund is being sent back to the IRS for additional review by the Return Integrity Verifications Operations Unit, and you getting that refund will depend on what happens during their review of your tax return. We're seeing a high level of improper claims being filed this year from the Earned Income Tax Credit, Fuel Tax Credit, and the Employee Retention Credit, so the IRS is ramping up enforcement and reviews to properly ensure legitimate refunds are being issued. If your refund was returned as flagged, expect possible requests for documentation from the IRS to substantiate the credits you're attempting to claim on your tax return. Now, on the topic of improper credits being claimed, one of the notices now being reported as received by some taxpayers, including at least 2 of our viewers, is the IRS 3176C notice like seen here. Now, the IRS will send out this notice to taxpayers who, for example, file a tax return with frivolous income and withholding amounts, are trying to claim certain credits and to not provide requested proof from the IRS to support the amounts in question. Now, this is one of the more serious notices the IRS will issue, and the impacted taxpayer will have a chance to correct the issue by submitting a correct tax return to avoid a potential $5,000 penalty or the proper paperwork to substantiate the credits being claimed. Some taxpayers that are reported receiving this notice have indicated they had someone else file their taxes for them and did not know about the mistakes. However, the problem is the responsibility of the tax return is ultimately that of the taxpayer. So while tax preparers can be reported for filing frivolous tax returns, it is the taxpayer who will be held accountable for any issues that arise, even if they hired someone to do their taxes. If you receive this notice, you must take appropriate action immediately. And if you need further assistance and believe there's an issue with your tax preparer, schedule an appointment at a local IRS office or open up a case with the Taxpayer Advocate Service. Now, moving on to the developing story, as the IRS has announced they will no longer allow anyone attempting to claim the employee retention credit until at least next year. Now, the credit, which really took off during the pandemic, saw 3.6 million claims over the course of the program. However, in recent months, have seen high amounts of improper claims being filed in regards to those credits. Now, ERC is worth up to $26,000 per worker, and it's a refundable tax credit for businesses that continue to pay employees while the company ended up being shut down during the height of the pandemic or had a significant decline in gross receipts from March of 2020 till the end of 2021. Now, even though companies can still go back and claim this credit for income in 2020 and 2021, what is alarming is 600,000 claims for ERC have been filed in just the last 90 days, and that has been a cause of significant concern that the IRS has put a pause on this program. The IRS has already initiated investigations involving nearly $3 billion in ERC refunds, with criminal cases having been open, audits for those claiming ERC already taking place. Now, businesses have appeared all over the country offering at the cost of fees with the help to obtain that ERC credit. The IRS has said processing work will continue for those who've already made claims, but the IRS also announced plans to offer a new withdrawal option to enable small businesses to end a pending claim if the businesses now realize that it might have been tricked by promoters and don't really qualify for the credit. Before this new development, the IRS was quoting wait times on ERC reviews at 90 days, but that has been adjusted to 6 months as a result. Unfortunately, it's more likely huge amounts of these claims are fraudulent, which will only delay processing of legitimate claims. As a reminder, starting this tax year, for those who have or will receive $600 or more for goods or services throughout the year on platforms such as Venmo, PayPal, or sell on sites such as eBay and Etsy, they'll be receiving a 1099-K form in January that must be reported on their tax returns as income. Due to changes in the tax law, anyone who receives over $600 in payments for goods and services must supposed to report that income on their tax returns. Now, originally it was supposed to apply to last year's income, but with the confusion and preparation time needed, it was postponed 1 year as a result. Now, personal transactions such as money being sent to friends or family are not to be counted as part of that $600 amount, but the fear is that many people are accidentally going to be sent these forms by mistake due to transactions not properly categorized, which can lead to further problems and even delays next tax season with those tax refunds. Now, there are suggestions in Congress that the rule should be changed from $600 a year to $10,000 in a year, which would eliminate the need for many to file their 1099-K forms as a result. But as of this recording, nothing has been said yet, so we'll see what happens in the fall. If you're among those who receive $600 in goods and services through online platforms, make sure you wait till you receive that 1099-K form before filing your taxes. If not, it could lead to possible refund delays and the need to file an amended return as a result. But this come reported may result in smaller refunds as 1099-Ks do not have taxes withheld, so the taxpayer would be responsible for all taxes owed on that income. Let us know in the comment section below about your ongoing tax issue, if any. In the meantime, we'll keep monitoring the situation for further developments, so make sure to click on the thumbs up and subscribe button below for future updates on this channel, and thanks for watching.